So, picture this, you're at a big soccer game, and the crowd is going wild. The players score a goal, and suddenly, everyone's on their feet, clapping, yelling, and high-fiving each other. That energy in the air? It's like a signal, telling you how excited and positive everyone feels about the game. But it's about little signals that show if people are feeling good or nervous about things. In this case, we're talking about something called funding rates, which are like the heartbeat of the market, telling us if traders are super optimistic or a bit worried, the overall sentiment, or in simple terms, how people are feeling about the market. Okay, let's break it down step by step so it's easy to follow. First off, let's keep it simple. What are funding rates? Think of them as a little fee that traders pay each other in the crypto world, especially when they're dealing with something called perpetual futures. You know, those are contracts where you bet on whether Bitcoin's price will go up or down, but without a set end date. If a lot of people are betting that the price will keep rising, that's called being long. They might have to pay a funding fee to those who think it's going down, the short folks. And vice versa. It's like a balancing act to keep things fair. Now, why does this matter? Because these funding rates can show us the overall sentiment of the market. If the rates are positive and high, it means traders are mostly bullish, they're optimistic and expecting prices to climb. On the flip side, if rates are negative, it could signal that people are bearish, thinking prices might drop soon. Here's where it gets interesting. Funding rates can act as a mood indicator. If you see funding rates spiking up, that often means the market is feeling greedy or overly excited. Traders are pouring in money, thinking Bitcoin will keep soaring, which pushes the rates higher. But remember, too much excitement can lead to trouble. Just like if everyone at the fruit stand overbuys apples, prices might crash if supply runs out or people change their minds. On the other hand, if funding rates are low or negative, it might show that the market is cautious or even fearful for any reasons like news stories about regulations cracking down or economic troubles making people sell off their crypto. For those familiar with these indicators, you might wonder, what's the difference between the Fear and Greed Index and funding rates? The Fear and Greed Index lags slightly, while funding rates react to the market in real time. While funding rate is a tool to show the market sentiment, but it's not a foolproof though. I mean, you cannot rely on them 100%.